Hello guys and welcome to our 103rd Trading Opportunities webinar. Before I get started, let me just quickly check the audio, if it's broadcasting perfectly or what. Looks like we are live on LinkedIn as well as YouTube. So in that case, let's get started here, guys. So before any delay, guys, let's get done with the legalities. Here's the disclaimer on screen. Basically suggesting all content here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purposes, you yourselves will be liable for your profit, your loss, or loss of profit. That being said, let's now head over to our quick introduction part. As you guys already know, my name is Neerav. I'm the admin and owner of 50eyes.com website as well as the 50eyes market analysis YouTube channel, where this broadcast is currently being done live alongside our LinkedIn page or profile or whatever you would call it. Right. So what is this? This is a weekly webinar series where I share my understanding of the markets based on my understanding of basically advanced Elliott Wave, which is a technical analysis methodology. Right. We discuss various markets, including indices, commodities, Forex, etc., etc. And I've been doing it for quite some time. As you can see here, we have completed 102 webinars, and today is the 103rd one, which is being broadcasted. We conduct these webinars every Friday at 2 p.m. GMT or 7:30 p.m. IST. So whichever time zone you are in, you can just convert it accordingly. This is when we go live. And apart from that, in the past 102 webinars, we have in total discussed live and captured 227 trades, which includes the 3 trades which were discussed in the last webinar, this one. Right. So overall in this series, we have so far captured this many opportunities. Apart from that, I also have a book on Amazon's Kindle platform. If you want to, you can have a quick look at it. It is for intermediate to advanced traders. At least you must have the basics on Elliott Wave clear to read this book. It's called Think with the Markets, as you can see on the banner of the YouTube page. And forecast accuracy. Yes, I just want to show quickly that I've been keeping a track record of all the past webinars and YouTube videos which are published since 2016. For our accuracy has stood above 80%, as you can see, 83.34, 2016, 87, 2017, 84.61, 18, 84.88, 19, 88.52, 80, 20, and 2021, 82.22. And after that, we have been doing this weekly webinar series, for which our score currently stands at 227 trades in the last 102 webinars. And lastly, my analysis is currently also available in my private Slack group. In case you are interested, you can request detail by visiting the contact us page and selecting the subject matter requesting details for private Slack group. This is only for people who know Elliott Wave, at least at the basic level. If you do not, I highly recommend you go and check out the video course, the complete guide to professional trading with Elliott Wave, available via my website currently at, I believe, a 5% discount. And it already has 1500 plus students and I believe 4.8 or 4.9 rating something. So heavily suggest you check this out in case you are a beginner. Right. With that being said, let's now head over to our current webinar discussions, and we will begin our discussion as always. Let me just check audio one more time before I actually go live with the content. We will begin our discussion. Yes, working fine at mine. So yes, as I was saying, we will go ahead with our discussion, starting with Euro USD, followed by crude oil, gold, S&P's 500, Nifty, and in the end, we'll discuss Bitcoin. Right. So that's the sequence we'll follow. In case you are currently attending the webinar live, you can post any doubts or questions you have in the live chat section. right? What else? Let me just quickly just load up the actual chart. So first chart which we'll be discussing is the chart of Euro USD, and here on chart I have here on screen I've already loaded the chart. And before discussing the chart of Euro USD, let's quickly have a look at what was being discussed about this chart in the last webinar. Here is the last webinar discussion on Euro USD. We discussed it around over here somewhere. This is the recording of the last webinar, by the way. It was conducted on 16th of February 2024. Let's see where it is, somewhere here. So yeah, you can check the whole thing. I'm not going to play it or anything. Just to give you a gist of what we were discussing, the market was at the time of discussion trading around 1.07435, and the idea was that we will look to go long above this trend line, this pink trend line, whenever it breaks to the upside, pink or red, whatever this color is, right? So what happened later on in the week, as we can see on the live chart now, is that the market did go above this trend line. On the real chart, as you can see, this green one, it's the same over there. I had drawn it with a different color. Actually, I have changed a few things. That's the line we were discussing on the last webinar. Overall, in the coming week, I have changed a few things. But yes, let's discuss it from the perspective of our last understanding. Market did break the high, did break the trend line to the upside, and I was able to enter longs on this counter. I am currently holding longs on this counter, and with that being said, let's have a quick look at the updated count I have. So a minor few adjustments on the structure to the downside, counting it as a ABC correction already complete, right? Apart from that, what I'm seeing is a possibility of the continuation as a triangle, right? And in case this market is continuing as a triangle, I expect some more what do you call upward movement on this counter, right? So that being said, what is the stance here? So the stance will be to keep holding the longs, and what I like to do is I believe my current stop loss is a little bit too low. We'll look to adjust it. But right now, what I think is, let me just put the alert first here. Right now, what I think is that what we are seeing is a possible zigzag maybe in play from here, right? So basically, I will like to wait in my long trades and try to capture this leg up, basically. So that's the play for now. So technically, as I said, stop loss should be somewhere here near the low, which is currently standing around 1.07019. But depending upon the market movement, I will look to adjust it and move it a little bit up. Perhaps I should move it to 1.07379 below this low. But that obviously depends from person to person, depending upon your entry and all that. But that's the play we are looking for. One more up leg is expected on euro. Minimum target always is the break of the last high, 1.08886. But I personally believe that in this case, it can go a little bit further than that. I will not project the exact targets because at this point in time, we do not have the complete retracement. Once this three legs movement to the downside is complete, we will have a complete retracement, and that will allow us to project the target. Generally, what you will do is you will measure this movement and project the length of it from here, and that should be good enough for a target, right? All that being said, I think it can go and touch 1.0924 levels and so on and so forth. With this expected progression, I'll just continue holding the longs until something completely contrary happens. Nothing much to add on euro, and we'll now move on to our next chart. And it looks like we have our first message in the chat from Martin. Keep up the good work. Hey, Martin, nice to see you back after such a long time, I believe. And next up, let's head over to our chart of crude oil, where things seem to be moving as per our analysis. As always, I'll just quickly head over to our recording for the crude oil chart. So here is the discussion done in the last webinar. I'll just move to a point where we have something concrete. So crude oil, I believe the counts have yeah, basically that's what we were expecting. So this is the recording from the last webinar's analysis on CL. We were expecting market to move higher basically, or move higher after correction. There were two main possibilities which were discussed, as you can see with these arrows. I'll just draw on top of the recording here in yellow color. Yeah, we have yellow here. So what we were expecting was first the possibility that the market may give a minor correction and then go up, and the second possibility was that the market will straight away go up, right? And now let's see what's really happening on the actual chart of CL here. So this was the last discussion, 16th of February. Somewhere over here we were discussing the market was somewhere here, right? So our main analysis was that this market may be forming a triangle kind of correction. Let me just point that out again. There were two main hypotheses, both of sort of equal strength. One was that this is a triangle structure, a corrective price structure, which should look like this. If you draw the trend lines, it will be resembling a triangle pattern. On the real chart, this is what we were expecting, right? So since then, we have been tracking this, and analysis, as always, as I said, was that some sideways continuation for wave E, sideways to bearish maybe there, right? But now since then, what has happened is this market has gone and almost touched the last high, but did not break it, right? Almost touched, not actually touched, some ticks left. So based on that, I am thinking that perhaps this market is already completed the corrective structure here. So we will now analyze it from the perspective of a possible C wave heading in the other direction. So I am assuming this is the A wave, this is the B, already complete here. And in that case, this is going to be the wave C. Now, if it's wave C, then again, keep in mind, this is one of the 2, 3 analysis which I have. I'm just outlining it because it makes the most sense as of now. So if this is a wave C, which we are expecting in the upward direction, then we need to at least break out and take out this high of 79.243, right? And if this is the B complete already over here, then this is the wave 1 of the C. This is the 2 of the C. And the 3 of the C is still to come in play, right? The only thing to keep in mind is that the wave 2 of the C can give a deeper retracement. Now, those of you not familiar with the Elliott Wave terminologies, you can see the implementation of a rough impulse. This is called the wave 1. This correction is called a 2, and then it's followed by the third wave, which is what we have roughly drawn here. Now, since we are in the wave 2 can go deeper, and it can even go to the 50-60% retracement of this whole leg, which will take this market somewhere between this price range around 75-ish level, I should say roughly. And that is the thing to keep in mind, that a deeper retracement might be seen before this market actually takes off and gives us what we are looking for, a clear long or up movement. For some reason, it's not working here. Let's see what's going on here. So yeah, as I was saying, in crude oil, we are still waiting for this one leg up. Wave 2 can go and give a deeper correction. So be on the lookout for that. And I'll just project the targets for the expected corrective structures for 2. Give me a moment here. Now, since it is looking like a flat correction, I personally do not think a deeper retracement will be seen, but we don't know if it turns into a complex or does something completely out of the ordinary. So better be prepared for it. So these are the marked levels. Our first line of support is 75.94, followed by 75-ish level. and followed by 75. So these are the areas where we expect the market can take support if it continues its corrective structure. And overall, we are counting on this count to become an impulse and waiting for the wave third to play, right? And if we are wrong, then we will know if the market sustains below 74.2, right? So we can just type it here. So this is the range for the downside. Let me remove everything at once. This is the corrective range for the downside, either 75.94 or 75 to 74.2. And if we see sustenance below 74.2, then that's a negative or a bad indication for our analysis, and perhaps something else is going on. So that's when I will be cautious. So for now, long bias remains active on CL with this all detail in mind. With that being said, let's now switch over to our next chart of gold. So here is the chart, but as always, I'm just trying to load our last webinar so that we can check what was being said on gold in the last webinar and take things from there. So here's the recording from the last webinar. Let's see gold discussed somewhere here. What was being said. So gold, I remember there were two main themes which we discussed in the last webinar. This is quite a lengthy discussion on gold. It started around 14 something and till 25. So almost 9-10 minutes. Just go ahead and check it yourselves if you're interested in the whole thing. But there are two main things which we discussed. Play the recording and then you can see what are the two main things. Right. So the first analysis, I've paused the recording at this point in time, and the first analysis was that market can go up for the two and then go down, and the hypothesis to yellow count was that it will go down and then come up for the wave C and then down for the wave 3 start. Right. Now our setup was that if the market does break out below 1997 at once, then we will be, I think it is 1997. This trend, this dotted line, if it goes below this dotted line, then I was interested in the shorts. It never did that. It never went below this dotted line, and it actually went up. So as per our last discussion, hypothesis one actually played out. It's now time to see and check that on the real chart as well. So here's the real chart. So this was 1997. I think we had the alert line over here somewhere. As I said, I cannot pinpoint the exact location. Yeah, it's at the below this support. Let's see. Yeah, so it was here, 1990. So never broke below 1990. So the short or the hypothesis 2 never got triggered, and then it played along as per hypothesis 1. So basically worked out as per our analysis, or the main count at least. Now let's see what it's doing right now. Right now, there are still the same two possibilities present here, with the bias currently shifted a little bit towards this one, that it will go up first and then give a deeper correction. Right. So I'm not going to go long anytime soon. Probably I'll take some scalp longs above 2033. Right. Other than that, I'm not adding anything in this counter. Why? Because the secondary possibility is that this market may still have one more leg correction and then a strong leg down for wave 3. Right. So given that the possibility of one more down leg before any sort of breakthrough to the upside is existent, that's why I'm not going to add anything at all at this point in time. About 2033, maybe only scalp longs. Why? Because let's consider the possibility that the market does break 2033. Then what is this really? A flat? And where can a flat go? Maybe till the high, right? But that's not good enough. Why? Because the flat can also just take out the high, complete itself, and then fall because the wave 2 is completed with the breaking of this high. You're getting my point? Once this minor high is broken out, the wave C is technically complete and then it can just move lower. So that means any longs here are completely risky here. So it's better to go short term here, as per my understanding. Of course, anything changes, then I'll look to trade accordingly. But right now, with the current data on screen, while I'll be looking for longs, it will again be risky and possibly short term only. So this is the count we are currently following. And as far as the, let's just call this as our H1, right? And as far as the secondary possibility goes, let's check that as well. Secondary possibility is the bearish one. Let's call that the H2. So pretty clear here. We look to play H1 above 2033 and look to play H2 near the lows. Currently do not have a defined level, but let's say below 1994, we will consider looking for H2's trade setup to play out. So pretty much wait and watch on gold. No clear trade direction as of now, and definitely remain more cautious above 2033 because of the defined possibility of short-term upward movement only. And as you can already see, there's a lot of congestion here, so that will probably act as a resistance. So nothing much to add here. Let's now head over to S&P, where we were expecting upward movement, and upward movement has appeared on screen. Hello, Marco. Salvatore, I think I have had some emails from you as well, Marco. Nice to see you in the live chat. It looks like my live chat is delayed or something. Let me see again. Maybe it is getting delayed. So yeah, as I was saying, guys, we are done with the analysis of gold. Let's now head over to our outlook on S&P's 500. And before moving to the current chart progression of S&P 500, let's just quickly check what was being said on S&P in the last webinar. So here we have the recording for the last webinar, which is the 102nd webinar. And let's check S&P somewhere. Discussion was done here. Let's see. So it was very clear discussion. The market did go very deep, as I was pointing out with this circle or this leg down circle, and we were expecting that this is going up for 1 2, and then this will be up going up for a 3 from here on. So basically the idea was it can go a little bit like this, straight up like this. So basically swing perspective, it was long. That was the whole discussion. But if you want to check it, you can again go to the YouTube channel 50 as market analysis and check the 102nd webinar in the live section over here. Right, with that being said, let's now head over to our actual chart. And this is the chart of S&P on screen. This was the discussion done on 16th February. Market was trading somewhere around here, roughly speaking. And since then, the market has not broken the low. So the count remains intact. And it has actually just now touched my minimum expected upside target 5100. So above 5100, it will become even more bullish. Let's say around 5120. If it crosses 5120 in the current session, the possibility of extremely strong bull rally becomes even more stronger, because around 5100 I was expecting a correction might ensue. So that possibility is still not out of the water. It will become blown away or a thing of the past once we see move above 5120, right? A correction might still happen, but it will not be that serious is my expectation on this count. So what's the perspective here on S&P? Nothing has changed, still the same, right? And still the market is heading higher. So we'll just say that we are looking for this market to move in the wave 3 as per our analysis, and nothing new at all. Since I'm already long, I believe these longs are being carried since our last webinar, and actually even before that. So I'll just continue trailing the thing. Nothing in it to add more here. As far as the upside targets are concerned, I think we already have marked something around 5200, 52 actually, 52 10-ish level, 52 12-ish level. But as you know, 5200 itself will be a possible psychological resistance level. So most likely we will look for the market to take some resistance there. But there's one thing I can do here. So here we can have some sort of idea about the targets. Immediate one is coming at 5150, 5200, 5280. So one is 5150 and then 5200 and 5280. Neat enough. So that's all on S&P for now. Keep trailing if you are already long. And I guess nothing much to add here on this. Yes, so wave 3, just one thing to keep in mind. If this analysis is going to play out as correct, then wave 3s you should already know are known to be the strongest. And in strong rallies, even these targets are blown by strong magnitudes. It can go. Expectation is what 5100. If it goes to 5280, it will be 180 points. But in reality, it could be double of that, 360 points, even more than 360. I have seen movements up to 4 times of expectation for wave 3 and sometimes even more. So just keep that in mind and keep trailing. It's a kind of situation where you want to get lucky and not get out too quick. Nothing to add here on S&P. And if you guys are watching this webinar live right now or later on as the recording, I would request, if you like the content, do not forget to hit the like button and leave something nice in the comment section, because the YouTube algorithm does track likes and comments, and basis on that it promotes the content or not, right? So as I said, hit the like and make sure to leave a nice comment. And lastly, share it. Sharing is even more important. The more people you share it with, the more views and likes and comments we can have. So kindly do your part. We are at the 103rd webinar in this series, so share it with more people so we can have a consistent viewing and we can continue doing these webinars just like that in the future. With that being said, let's now head over to our last two charts, Nifty, which will be followed by Bitcoin. A Nifty chart also actually worked out as per our analysis. And let's quickly go and check the recording from the last webinar. So here we have the recording from the 102nd webinar, as you can see on the bottom here, not the bottom, the middle of the page on the left, as just highlighted. So this is the recording for the last webinar, and let's check what we were saying about Nifty in the last webinar by heading to Nifty section. Yeah, there it is. So this was our understanding in the last webinar that this market, I mean, yeah, that was just minor projection there. So our understanding in the last webinar was that one leg up is remaining. We did two analysis, and both of them suggested that one leg up is remaining. The target was around 22,400 to 500. I'll just let this recording play out and see if there's any mention of that. Yeah, so as you can see, we were suggesting upward movement. And yeah, there is one mention which, as you can see here, 0.5. So the idea was that this market has gone up from 21,150, let's 165 to 22,100. So almost 1,000 points, right? Not exactly, but if we go half of it, then we expect at least 500 points from 21,547, and that level was already achieved. That's the point I was making there. Next target will be 61.8 of it, and next will be 1:1. So that gave us the target of 22,400 to 20,500, and this is the actual chart where is it? There it is. Here's the actual chart of Nifty, and this was a discussion done on 16th February. 16 February. Here's a question from Marco. Where can I send you question? Where can with the photo? So Marco, if you have a question, then if you are enrolled in the video course, then you can post it in the video course only. And I think you are, but for those of you watching later on, I do not take questions from audience, only from the students. So you can just post it in the course itself, and I'll take a look at it and respond to you accordingly. So now heading back to our webinar, what I was saying was that our discussion was done over here, right? There was some short-term discussion as well. And the idea was that this is the first leg up, second, and then upward movement expected, right? Now, what has happened is we did see a correction here. And interesting enough, I was actually able to not only pinpoint the end of this correction, but also trade this leg up. Literally in live market, this was an exceptionally strong move. And I have, in fact, posted it in the Slack private group as well. Where's it? Yeah, there it is. So this was posted at 1:41 p.m. yesterday, that is Thursday, which was the expiry for Nifty contracts in Nifty 50 channel, of course. And the idea was Wave looks complete, suggesting that market can go higher if we see resistance above 22,200 points or more. And after that, the market did go up to, where did it go up to? Let's see, 22,085. And when was it posted? It was posted at 22,000, of course, and 20,085. So 80 plus points the market went up. But because the movement was later in the day after 140, and it only took the market what do you call roughly 25 minutes to go there, this led to a 4x gain in the calls. But keep in mind, later on the calls went to 8x, but I was long in it, and around 4x I was out. So this was an exceptionally strong move which we were able to capture. And as you can see, later in the day, it went from our first target. When I exited here, the market did actually correct here as well. So there were a lot of people who booked profit here. And then it rallied even further. So the calls went to 8x and even higher. So this was all captured live and even shared with my, what do you call, members. In case you are wondering, the Slack private group is currently open. And if you are interested, you can send details of how to enter the private group by visiting 50eyes.com/contact us and selecting the subject matter as requesting details for Slack private group. And that being said, let's now see what's going to happen, not going to, what I think may be happening here. So it does look like we have just completed a corrective structure here, flat kind of correction, possibly from this point of reference, A, B, and C. And this is the end of the correction, possibly. And if that is the case, then we expect movement to the upside. But keep in mind, the upside movement, we have a strong resistance at 22,354. So let's see what we are saying here. Let's zoom in a little bit. The first thing is we are expecting from this price level, point of reference around 21874, that maybe a wave one is complete, wave two may be continuing to the downside, and then new leg up is in play, right? If that is the correct count, then a deeper correction may be possible, because wave two, as you know, can go to 50, 60 or even lower. So we have marked the support levels 21,136. Sorry, 22,136. Followed by 50-60 region, which is around 22,085, 22,040. Well, this is the range we are expecting the support to come in, and as soon as we see a break of the highs, we will be interested in taking longs on this counter, right? Now, next thing is where can the longs go to? If the market is super bullish, then there is no need for targets. It can just keep flying high and high. But if something else is playing out, then we expect immediate resistance at 22,355, followed by next resistance incoming at 22,500. But yeah, as I said, if the market is super bullish, then these targets will not be of much relevance. It can just fly from here quite fast and quite strong. Right. So this is the setup for our discussion on Nifty. And so far, it's moving as per our analysis discussed in the last webinar, and everything is working as per plan. Let's see how it goes from here. You're welcome, Marco. There is one thing here I just wanted to tell you guys. While I did make an announcement to cover Nifty during the week as well, but it was a very hectic week and I did not find any time. I am though still planning to continue with the idea of covering Nifty separately. Those will be vertical feeds or whatever YouTube calls them. So they will be better viewable on phones. What I'm planning to do is use the feature from YouTube of vertical streaming. So you will get a chart in this orientation like a phone screen. So that's why I said it they will be better viewable on phone. However, I'm not so sure about the following of it. The number of comments of people interested in that were not that many. So if you are interested in such a thing, make sure to let me know in the comment section of the video that you will be interested in separate coverage of Nifty and Bank Nifty during the week as well. Right. So with that being said, let's now head over to our last analysis of Bitcoin. And again, guys, if you are in the live chat or watching the webinar as a recording, and if you're liking the content, do not forget to hit the like button and share the content once this broadcast is finished. So let's first quickly check what was being said about the chart of Bitcoin in the last webinar. This is the recording of the last webinar. Somewhere here we discussed the chart of Bitcoin, and the idea was that this market can see some pullback. We are expecting upward movement, but the upward movement can see a significant pullback, as you can see with the arrows drawn in the last 100-second webinar's discussion. Why? Because we had a resistance in place at 53,000 and the market was already hovering at that level of 53,000. Hence, a possible correction was expected. Now let's have a look at the actual chart. And there it is on screen, the chart of Bitcoin. A little bit of updation I have done since our last discussion in the count. Now here is the resistance line of 53,000, which was mentioned earlier, right? And as you can see, the market has not been able to cross above that level at all, still hovering below it. And most likely it is hovering like a possible wave for correction. Now, how will we know anything about this market from here on? First thing is we see that a wave 4 can take support at 23.6 or 38.2, and we are already at 23.6 level at almost at 23.6 at 50447 on this chart, and the next support incoming at 38.2 is 4888. Right. So these are the two levels where the market can expect we can expect some reversal on this counter, right? And overall, I have also placed an alert near the upside of 52,563. If it goes higher than that, then perhaps we are already in the wave 5 rally. So overall, we are expecting one wave for this circle 3, one for the circle 5, which is not on chart. So this is the expected progression on this count. Right. So wait and watch on Bitcoin for now. Maybe place some alerts like I have near the 49,000 mark and some around the 50,500 mark. If we see some resistance support here and then reversal, then we'll be expecting some upward movement. Otherwise, just wait and watch on BTC. Right. So guys, that's about all for our discussions on these webinars. I would like to point out a few things here. We will be starting our next batch for training program LT in the month of March 2024. That is next month. So those of you who are interested in the same can make your inquiries by heading to the website over here and selecting the courses section training program LT. Now do keep in mind the training program LT is a very intense program. It is one-to-one classes and it's only available for people who have gone through my video course and are interested in upping their game and heading into more serious. So it is only for professional traders and specifically for traders who have gone through my own video course first and want to continue their learning. So if you are one of those people who has the basics clear and looking for better things, then you can fill in the details. You can see the URL is at the top here. Fill in the inquiry forms because this takes a lot of time here. Once you fill in the details, I'll get back later on. We'll arrange meeting and so on and so forth. So it's a time consuming process. And I'm making the announcement quite late actually. I should have been announcing it in the last or last to last webinar. Right. So that's about it for the announcement. And yeah, lastly, I am also planning a separate webinar, Profits Revealed webinar upcoming, which will only be available to people who are registered in the emailing list. So if you are not, go to 50eyes.com/subscribe dash emailing list and put in your email IDs because the Profits Revealed webinars are always private and only available live only. There are no recordings available for them. So if you're interested in being a part of it and checking out all the details of what I have achieved in the last few months, P&Ls and whatever rest of the private details, then you will have to subscribe to the list. Right. So that being said, thank you for staying till the end and make sure to like and more importantly share the content with your friends, colleagues, and all those people who may find it of use. And I'll hope to see you guys in the next one, guys. Take care. Bye.